Will we see interest rates moving lower next year, 2024? Now, the Federal Reserve has penciled in lower interest rates if they achieve their goals. The biggest push for inflation that we just saw was housing. When you break down all the charts and you look at it, you realize that we're probably not out of the woods yet. Mortgage rates are falling because there's the perception that we're going to see lower interest rates next year. As mortgage rates move lower, prices moving back upward. The housing market is a mess. When you look at those, it's a balancing act that I still don't believe the Federal Reserve will get right. That I think that as mortgage rates move lower, more people will enter into the housing market trying to buy a house. There's not enough supply. In the meantime, the homebuilders ETF, if you've taken a look at that, on fire, and will push higher if we see mortgage rates continue to move lower. But housing prices are going to remain lofted and likely to move higher because there's simply not enough supply. This is going to be difficult for the Fed to achieve its goals and get interest rates lower for next year. Let's jump in. I want to show you a couple charts that I'm keeping an eye on because this could be the make or break, and it should be something that you should keep in mind if you're trading, say, SPY Stock or QQQ. Eventually, they could sell off if the Federal Reserve signals we're not there yet. Let's jump in. If you're just finding my channel for the first time, thanks so much for stopping by. I'm an economist first and foremost. I apply the economy to how it will affect the stock market. And today I wanted to focus on, of course, the housing market because I think that this is really going to be the issue for the economy and potentially inflation. Then, of course, SPY Stock, QQQ, and all the other ETFs that you might be trading should you be involved in those kinds of markets. What we're looking at is Case-Shiller House Price Index here. And the house price index has kind of popped back upward, softening a little bit, but slight trend higher. And I can show that. Here's the house price index year over year. We're starting to see prices trending slightly higher in the year over year index. You can see the big spike we had, of course, in that drove inflation. Mind you, 70% of the inflation that we saw was housing within the CPI and PCE deflators. So should we see the rate of growth of the house price index continue higher and start pushing towards, say, 10% again, that could, of course, trigger more inflation. And when you're looking backwards in here, keep in mind after 2004, of course, we saw elevated prices then. That was the housing crisis, or housing bubble. And from 2020 onward, that big spike, of course, was when mortgage rates were dropped down to less than 3%. And think that through. All those individuals that either refinanced their homes or bought homes did so at a rate that is so low, likely never see that rate again in our lifetimes. They're not selling their homes. Some of them are renting them out and buying other homes, but they're keeping that because the payments are so low. Existing home sales plummeting. Simply put, there's not enough supply out there to create existing home sales turnovers. We have a supply issue, and it's reasoned that we're about 5 million homes shy of where we should be given the size of our population and population growth. 5 million homes. The mortgage rate, as you can see, is moving lower. And it'll soften a little bit. Maybe we'll see 6.5 to 7, 7.25, which makes buying any home, regardless of the price, more affordable. However, there's not enough supply. All those individuals who have their 3% mortgage rates are not selling. So that supply just simply isn't turning over. Given that, without that lack of supply, home builders need to make up the difference. And we're seeing a slight dip and sort of turn higher with the home builders indexes because mortgage rates are moving lower. Individuals are going to want to step in and start buying houses. Home builder stocks, and I have the home builders ETF XHB stock. It's the last chart I have on here. You'll want to see this flying because mortgage rates are moving lower. So if the mortgage rate sort of mellows out at this level, affordability increases. But all those people who have those mortgages from 3%, 3.5%, they're not selling. So it's up to the home builders to create that supply, but there's simply not enough capability within the home builders to do so. Homes for sale. This is the total inventory of homes for sale. And as you can see, while we're not at the absolute bottom, we're pretty low. Given this, with homes for sale as low as it is, we need those home builders to step up. They're going to be profitable. Mortgage rates move lower, making it more affordable. Home builders can sit there and say, I got a plot of land. Let's go ahead and build you a house. I'll sell it to you. And they're going to be profitable. The home builders ETF, XHB stock, of course, is flying. But the issue is for inflation moving forward and how this would affect, say, SPY stock or QQQ. If mortgage rates just mellow out right here without enough supply, price will continue to move higher. If the rate of growth pops back upward to 7.5 or 10%, any gains we've received from inflation moving lower get taken right back. So I don't really see the Federal Reserve necessarily hitting their goal where we see this consistent, constant slide lower in inflation and we hit that 2% target rate. I simply don't see it. I've said it before. And in fact, in my 2024 stock market analysis, where I outlined that I thought SPY stock and QQQ would move higher, the eventuality is throughout 2024, the Federal Reserve is going to have to deal with the fact that housing is going to push inflation upward. Even if it's just a bit, what happens is it's sticky, inflation is sticky, and therefore we don't hit that 2% target rate. Interest rates need to remain higher for longer, which would mean SPY stock, QQQ, sell off. In the meantime, of course, there's still the home builders. Keep an eye on that. But here's another thing. Price to rent ratio. It isn't just the cost of buying a house. You can see that the price to rent ratio is sort of trickling back upward. So anybody who's actually renting an apartment or any kind of house or anything like that, they're starting to see that number increase again as well. If price moves higher, rent has to move up. Otherwise, there's a disproportion to what the landlord is going to have to pay. So again, it will be a continuation with inflation remaining sticky. I don't see 2% hitting. Simply put, I've said it before. No, we're not going to hit magically 2%. I think 2024, although the Federal Reserve may have penciled in interest rate declines, I think it's a tough call. In the meantime, SPY stock, QQQ, these are two ETFs on, of course, the S&P 500 and NASDAQ respectively. They shot through the roof. If we see one hint of an increase in inflation, SPY stock, QQQ, sell off. Bond yields start popping right back upward. It'll get ugly fast. In the meantime, of course, the SPY Home Builders ETF, this is XHB stock, and as you can see, like everything else, has shot up significantly. You'll want to pay attention to, if not invest directly into, this Home Builders ETF, because XHB does a pretty good job of across the board. It isn't just home builders. You'll get Home Depot in there. You'll get Williams-Sonoma in there, which of course is a strong buy by my analytics. Keep in mind, the Fed's target rate is 2%. If mortgage rates move down slightly, more people are going to want to step in. to the housing market. Once they do that, what few inventory is there, price goes up. Price moves higher, we see a year-over-year gain in housing prices. That pushes inflation, even if it keeps inflation flatline at this, 3% level? CPI is printing about 4%, 3.5% on CPI. If it remains flatline and doesn't decline, the Federal Reserve has not hit its 2% target rate. The Federal Reserve doesn't necessarily have an inflation issue per se driven by basic economics from supply and demand of normal products. What it has is a housing issue, one that they created with ultra low interest rates right after the pandemic started. That issue will take probably decades to sort through. Home builders is a possibility to start pumping out more and more first-time buyer houses to get individuals into their own home and build inventory available to ease price on housing sales. I don't see it in the next 9 months, 6 months. I say inflation remains sticky. The Federal Reserve kind of has to sit there and say, yeah, we're not quite there. We penciled in those 3 cuts. We're going to erase one of those pencil marks. This is what you're really going to need to pay attention to. Housing drove inflation, 70% of it. So stay focused on this. Make sure to hit that like and follow button if you're looking for this kind of content. Just launched the channel. Channel is doing very well. Thanks so much for all the great comments down below and all the follows. It is growing quickly. I break down the economy. I show how that affects the stock market, and on a regular basis, a home builders ETF. This is one that I put out. I try and do a home builders ETF video at least bi-weekly. SPY Stock QQQ. I do my stock market reviews almost every day, and I talk about SPY Stock and, of course, QQQ. Those two are such a big thing. Make sure to hit that like and follow button. See you in the next video.